Profit first and your therapy practice. My name is Toni Cameron with TLDR Accounting, and we provide tax and accounting services to therapists in private practice. It seems like everyone has heard of the book Profit First by Michael Michalowicz. Fantastic book. I've read it. I have it on my bookshelf. It's a really good book, and it talks about processes and systems, which I geek out on all the time, right? I think it's fantastic. It's an interesting system. It's all about making sure you have separate checking accounts and savings accounts set up for all of the things. Now, we've seen a lot of folks in therapy practices set this up, and then it trickles off. So it gets away from them usually 3 to 6 months after setup, and it becomes a little bit overwhelming because it does increase your bookkeeping that's required. And usually from the get-go, none of the therapists we work with are like, yes, it's time to do bookkeeping, right? They're like, it's something that needs to be done, and it can be a little complicated, right? So we have some adjustments that we usually do if someone wants to do Profit First, or if they're looking for a way to set up a system and process to follow the Profit First principles without having to open up all of the accounts. So we still recommend that you open up a checking account for your small business, along with a savings account that is just for taxes, and then a general business savings account. So we cut down on the number of accounts you have open. Normally, they also have a credit card in the business name open, so that's only 4 accounts instead of what sometimes can be up to 7. Especially since transfers in QuickBooks tend to be one of the areas that people can get confused and then can quickly become overwhelming when things won't tie out in QuickBooks. So we only recommend those 4 accounts, 2 savings accounts, a checking account, and then your credit card. Now that tax savings account, that is only for taxes. You should be setting aside 20% of your income into that account. Now, that would change depending on the type of therapy practice you are. Are you just a single member PLLC or LLC, or are you an S corporation? If you're an S corporation, things are a little bit different, and how your taxes are calculated are different since you're on payroll. If you're a single member PLLC/LLC, then you're paying taxes differently, right? It's on your personal tax return, and that calculation is different. Most of the people we work with haven't gotten to the point where they're S corporation. They're just a single member PLLC. So in that case, our general recommendation is you set 20% of your income each month into that tax savings account. Then when your estimates are due, you take the money that's set aside in that tax savings account and you pay the IRS. It's the simplified method. It isn't exact to everyone's situation, is obviously because it's general advice, but it usually can get someone close enough in the first couple of years that they don't need to worry about it too much. As things get more complicated, obviously you should then talk to an accountant to figure out how much you should be setting aside each month to making sure that you're hitting that target amount. That's our biggest thing, right? It's only those 3 accounts plus the credit card. In addition, we want you to transfer amount to that business savings account, because with your business savings account, that's where things like PTO, right? You're going to take a 2-week vacation. You still want to draw some money out of your business because you should be in the rhythm of paying yourself each month out of your business account. And if you take 2 weeks off, you're not seeing clients, you're not getting paid, but you still want to be able to take that money out of your business account. Our recommendation is that you are setting money aside into that business account. Usually 5 to 10% is a good range for it. Most people tend to start out at 5 and then up to 10% until they have a good amount in that business savings account, right? Because you want to have enough to equal your personal pay for at least 2 weeks. Some therapists like to take more time off than 2 weeks a year. You know, if we're budgeting for 6 weeks, we can actually calculate how much that should be, along with any, big things that might happen. Like what happens if your laptop dies for your practice and you need to go buy a new one, right? You want to make sure you have the money on hand for that. Or something like COVID happens and you have to pivot to telehealth. Having that little bit of buffer in your business savings account is important, right? So after you transfer the 20% to your tax account, 5 to 10% to your savings account, you should be left with 50 to 60% in your account after your expenses that you can transfer to your personal pay, right? So the goal is that you take all of this money before you spend money on expenses for the month for your practice, right? So say you got $100. It's $20 to the tax account. It's $10 to the business savings account. It's $50 to your personal account. And now you have money left over in your account that you can use for your normal therapy practice expenses. Now, from what we've seen, most therapy practices already have really low expenses, right? We see advertising usually on Psychology Today. It's a small monthly fee. We see their simple practice fees. We see some small amounts of continuing education, maybe some small office expenses. If they're still renting office space, $500 or less, sometimes more if they have a bigger office. But overall, monthly expenses tend to be really, really low for most practices. If they're not, that's one of the things we want to talk about, because we want to see where you're spending this money, and is it something you do need to be spending money on, or should it actually be going into your pocket? Because we want to increase the amount of money that is going into your pocket. Like, that's key, right? You need to be paid a living, sustainable wage for what you do to provide a good service to your clients, right? That's important. The Profit First system, their goal is to make sure that you are being paid sustainably and whatnot. It is a little bit of a complicated system, which is why we do recommend modifying it into just the 3 accounts and then the company credit card. The company credit card is really where all of your expenses should go. And if you're lucky enough, depending on the bank or financial institution you work for, you have cash back on it, which is great, because then you can just apply that to additional expenses that you have, and all you need to do is focus on paying off your company credit card each month from your business checking account. And that's basically 4 transactions each month coming out of your business checking account. It would be the transfer to taxes, which is that 20%, the transfer to business savings, which is 10%, your transfer to your personal account, which is your pay, and then the transfer to your company credit card. So that leaves only 4 transactions from your checking account each month for your practice. Now, you're going to obviously have transactions coming in from like Stripe if you're using Simple Practice, or from insurance companies if you're getting, if you're on insurance panels instead of just private pay. But it simplifies your bookkeeping each month, right? That's a doable level if someone wants to do it themselves. Now, just a couple of asterisks here. I know biggest number one thing, we talk about it a lot on our videos, is don't mix business and personal. So these accounts should be business accounts. They should be under the EIN of your business. They should not be under your personal social security number. Credit card, that should be a business credit card. That should not be a personal credit card. I know some people really like their cards because they get airline miles or rewards back, and they're not a business card. It complicates things as soon as you start using a personal credit card for business expenses. Make the switch to a business credit card. See if you can get one with 2-3% cash back, and then just use that, right? Keep it as simple as possible for your business, because your goal in business isn't to be dealing with your accounting or your finances. It's to be working with your clients. And so you want to be spending that time with your clients and have the accounting and financial side of things taken care of. So overall, do we recommend that you read the book? Yes. It's a fantastic book. Now, do we recommend you set up all of everything that he talks about? It depends on your situation. Like we said, most circumstances, 2 savings accounts, a checking account, and the credit card is good enough for your private practice, because you don't want it to be overwhelming. So hopefully y'all found this helpful. If so, subscribe below. Also, if you want to talk more about this with us, book an appointment.